Good morning, everybody, and happy Wednesday. I am Abby Cruz King, the Digital Marketing Specialist here at Myriad. Welcome to our webinar, Critical Thinking About Risk Management. And today we have with us Steve Snavely from Miller, Fiddler, and Hinkey. Fun fact, we are work neighbors. Our buildings are right next to each other. As a reminder, this webinar will be recorded and sent to all registrants, so if you miss something, don't worry. And feel free to use the chat function to ask any questions because we'll be doing a live Q&A at the end. And I'll let Steve tell you a little bit about himself and then he can take it away.
Yeah, thanks, Abby. I appreciate it. Like you said, we're neighbors and we're preparing for the snow here in Des Moines, Iowa. So those of you who are in warm locations, we're envious of you and wish you the best. Appreciate the time here today from Myriad to walk through some highlights around property casualty insurance. Critical thinking about risk management, primarily tied to the property casualty space. My background, I've been in the industry for 20 years. I've primarily been on the company side for about 15 of those 20 years. And then have about 5 years on the independent agency side. Currently, my role at Miller, Fiddler, and Hinkey Insurance is an account executive, basically a producer of new business in Iowa, surrounding areas, even coast to coast from that perspective. So appreciate everyone's time today. If you'll humor me, I am using some new technology. There'll be some polls, active polls here throughout the webinar. So if you have a chance, we'll see if this works. If you could get out your smartphone and scan the QR code and let me know where you are joining from today. Just be interested to see where everyone is coming in from and paying attention and listening in today. All right, well, our neighbors next door listening, that's good. Give it a little bit of time here to see if anyone else is out there. Oh, it went away. Well, hopefully there's some more people listening other than just next door. But I do know, talking with Abby, this will be housed in the library, and you'll be able to kind of have a webinar on demand. So today, just want to walk through high-level overview of the property casualty insurance market, kind of the market conditions, where we are, hard market versus soft market, where we are right now. Quick highlights around personal insurance for 2023, around business insurance for 2023, and dive in a little bit more to cyber insurance. It's a hot button right now, I think, for you as financial advisors. It's a key coverage line that needs to be discussed, that needs to be unpacked to make sure you have the appropriate coverage in the event of a cyber incident. So overall, I want to make sure you have that understanding of the property casualty market. You're able to talk to your independent agent or your agent around your business insurance, be able to talk intelligently with them. And then also, as you're talking to your clients, to be able to talk through home and auto, some of those trends that we'll walk through. So overall, the market from a property casualty insurance perspective is very cyclical. You can see here high water mark in 2001, followed by some good years of premium reductions from 05 to 2010, slight increase in 12, back down, and now, as you can see, we've entered increases really since the end of 2017 from an overall property casualty premium perspective. The easiest way to think about this, you have your premium changes. If you have a flat premium change, you're not getting a change, so you're at that 0%. Anything below the line as far as a premium reduction would indicate either a developing soft market or we're in a soft market, which we'll unpack here on the next slide. Anything above the line would indicate we're heading towards a hard market, or we are in a hard market right now from an overall premium standpoint and conditions standpoint. So when you consider a soft market, you're going to see, in most cases, a stable premium. In some cases, you're going to get your renewal premiums will decrease. Companies are willing to offer broader terms, maybe higher liability limits, higher work comp limits, lower deductibles as well. The underwriters are going to have a higher tolerance for risk. So what may have been, a tough class of business, some type of maybe a roofing contractor, for instance, where typically it would be very hard to find them coverage in the standard market. In a soft market, you're going to see underwriters may be willing to take those tougher classes and those tougher risks on their books. Also, like I said before, higher limits. You're going to see lower deductibles, higher umbrella limits available, higher liability limits available in that soft market. It's kind of what you could refer to as a buyer's market. Hard market, obviously completely opposite. And we are in one right now from a property casualty standpoint. Renewal premiums are increasing. You're seeing less capacity in the marketplace, much more conservative approach from company underwriters, willing to take on more risk. Underwriters, if they are going to renew the account, if they are going to stay on the account or write new business, they're going to have stricter controls. You're going to see company loss control representatives come in and look at the property. What does the property look like? Is it sprinkler? Is it clean? What are their recommendations? Workers' comp, do you have a return to work program? What is the return to work program? Auto continues to be a tough line in the property casualty space. Do you have a fleet management program? Do you have enough autos available to have a fleet management program? Do you pull MVRs ahead of time? So it is what we would refer to in some instances as a seller's market, in the fact that it's much more difficult to get very, very favorable terms compared to a soft market. Not impossible. We're still writing new business. We're still renewing accounts with companies. But it's a lot more of a consultative discussion that we have to have in the hard market with our clients from a property casualty standpoint. Some factors influencing the market conditions, really, it's either company driven or it's market driven. From a company standpoint, when we talk about TCR, that's called the trade combined ratio of a company. The barometer there is 100. If the company's under 100 TCR, they've made money. If they're over 100 TCR, they've lost money for that year. They didn't have an underwriting profit. Most companies break out their profit by line of business. So they'll look at the personal insurance, they'll look at home, auto, recreational vehicles, umbrella, business, same thing. They break out the comp, the liability, the property, and look through line by line. Did they make money in that line? If not, why not? What were the losses? What was the weather load? All those things. Investment returns as well. Are they able to take those premiums and invest them and make money? And then a big factor, especially right now, is the reinsurance programs that companies are looking at and the reinsurance treaties that they're looking at. A lot of companies I know had to renegotiate their reinsurance treaties here over the past couple of years. The companies had to take more risk on from a reinsurance standpoint and couldn't cede as much off in some of their treaties, but costs are still going up in that reinsurance space as well. And then the other primary component that drives the hard or the soft market in the property casualty space is the overall market itself. Weather. 2022, there were 15 major weather events. That's just considered major weather events throughout the U.S. That doesn't count a tornado here and there or hailstorm here and there. Just major. I believe that is $1 billion of loss or more that is driving those 15. So earthquakes, derechos that we've had here in the Midwest, forest fires. Also the market itself, the overall stability of the economy, and then really what you're seeing put a lot of pressure from a claims perspective is the inflation of goods. Building materials are up, labor costs are up. There's a labor shortage as well. Supply chain challenges of getting products and materials in. So all of that contributes to the hard or soft market from a property casualty standpoint. All of that increases a carrier's claims cost as well, which contributes to the hard or soft market and carriers needing to get more premium to be able to try and run a positive profit and a favorable TCR under that 100%. So I'll take another risk here with an active poll to see who's out there. How long has it been since you, oh, hold on, what happened? There we go.
Okay.
How long has it been since you reviewed your coverage A amount for your homeowner's insurance? Uh-oh. Well, we had one. All right. 3+ years. Anyone else out there want to contribute to the poll? All right. Well, we'll talk a little bit about the personal insurance market here and unpack that and why if it's, hey, less than a year. Okay. All right. Good. Let's talk a little bit about personal insurance in 2023. And when I talk personal insurance, that's your personally owned home, auto, boat, recreational vehicles, RV, possibly your jewelry and the umbrella that you may have. One of the significant challenges I've seen recently in working with insureds is an accurate home value on what's called your coverage A on your homeowner's policy. Typically, companies put a 2 to 4% inflation guard on your coverage A. So you're going to get that small incremental increase year over year. Well, if you look just at building materials have increased 35.6% since the start of the pandemic and increased 19.2% just last year alone. So that's just the material cost that should something happen to your home, let's just say a fire or hail to the roof, automatically your company's going to pay more because of the material, not to mention labor, not to mention the construction costs and everything combined in that. So for the most part, if you have not looked at your coverage A amount, your home value amount, in the past 3 years, I would highly recommend you have your agent run a current replacement cost estimator. And keep in mind, there's home value and then there's replacement cost. I talk to a lot of insureds that, essentially don't understand the difference. They're like, well, I can sell my home for $500,000. Why is my replacement cost coming back at $650,000? Well, again, the replacement cost is like-kind replacement with your home should it burn all the way down, or should it have any type of loss. So you're seeing those values inflated and you're seeing those increases there. Also, something else to keep in mind, most homeowners policies either offer 100% replacement, 125% of your coverage A, 150%, or guaranteed. So that's something else to have a discussion with on your agent. What percent, or do you have guaranteed, and do you have an accurate home value for your coverage A limit on your homeowner's insurance? The other item, auto premiums continue to rise. I just read an article that this will be the largest nationwide increase of auto premiums in the past 6 years. So on average, you're seeing an 8 to 9% increase in your auto premiums. If you're in New Hampshire, Georgia, Illinois, New York, and PA, you're going to see the largest anticipated increases in 2023. And we're talking anywhere from 13, 14, 15% in those states from an auto premium perspective. Companies continue, like I said earlier, everything is going up in price from materials to labor. So when companies go to pay claims, what used to be an average $500 claim is now $1,000 claim. So they have more out of pocket. So that's why you're seeing the premiums increase from both a home and specifically an auto perspective. From a business insurance standpoint in 2023, just some of the lines of coverage we talk about: property, liability, workers' comp, auto, cyber, the financial lines, your D&O, your E&O, your EPLI, umbrella as well. Right now, we're experiencing the hardest markets in property, cyber, and auto. On average, you're going to see property increases nationwide from 10 to 15%. If you're in a cat area, if you're on one of the coasts and you have an additional hurricane exposure, you could potentially see 15 to 20% increases. Cyber right now, the cyber market is crazy. What it used to be, you used to be able to get a quote online for $1 million coverage, 1,000 retention, and you were off and running, and it was a system approved quote. Cyber premiums now, you're seeing 25% to 100% increase in some cases. The term, the limits availability is not there like it used to be. I'll talk about this in a few slides, but you've got to make sure you're having multi-factor authentication for your business. You have a cyber incident response plan. There's a couple other components as well from a cyber standpoint. And then auto, similar to what I talked about on the personal line side, auto for business insurance continues to be a struggle. Every quarter since 2011, premiums have increased in the auto space. There has been over $20 billion of commercial auto losses since 2011 in the property casualty space, business space as a whole. Companies have raised rates, and it still hasn't been enough to keep up. So the auto market continues to be hard from an overall premium standpoint. The one bright spot right now from a business standpoint is workers' comp. If you look at the industry as a whole, workers' comp has made money consecutively for, I believe it's 7 years in a row. And companies want workers' comp. They are coming and asking for workers' comp. They want workers' comp as part of the property and cyber and liability and auto package as well to help offset what they view as some of the possible losses coming. So from that standpoint, that is the highlight of the line of business for business insurance. That would still be considered in a soft market. But property, we've had accounts that have had 150% increase in property. Cyber as well. We've had non-renewals, or we've had to make sure that the business has the right stopgaps and the right plans in place from a cyber perspective. So this is the last poll I have. Do you have cyber insurance coverage for your business? Yes or no, or I have no idea. It could be an answer as well. I'll give a little bit of time here. Abby, you can answer too if you want, since you're on the line with me.
Okay. Obviously, yeah, we have cyber insurance, and that is a huge thing that we recommend to our clients, because cyber threats are everywhere. And you might be thinking, well, I'm too small, I'm just a one-person team. Doesn't matter. Anyone is at risk for any sort of cyber threat. So that is something we deal with a lot.
Yep. No, I completely agree. I think just to kind of break it out a little bit more from a cyber claims perspective, you can see, and this is from a carrier we use for cyber, RPS, but this is their data. You can see where majority of cyber claims have been focused. Just to give you some additional statistics, over the past 3 years, cyber claims have increased 100% in nationwide in the U.S. Payouts have increased over 200%, with the average claim being $345,000. If you add in a ransomware attack, that actually increases to an average of $485,000. You can see manufacturing is the most targeted industry from a cyber claims perspective. When you think about manufacturing, there is a significant business interruption risk for manufacturing. And at prior company I was at, in 1 year, we had 3 manufacturing facilities that were subject to a ransomware attack. Basically, they come in, they shut down the machines, and they want, in this case, all 3 wanted $1 million paid from a ransomware perspective to give them the code to turn the machines back on. The construction industry, significant business interruption risk. when you look at investment advisors, financial advisors, yes, while it's only 4%, there still is a significant risk around what is your PII? What type of personal identifying information do you have on your servers? Do you store for your clients? And then two, I think the question, for you as business owners is what am I doing to prevent my business from being hacked? Am I using MFA, multi-factor authentication? What do my upgrades look like, my patches on a daily basis or a monthly basis? Do I have a cyber incident response plan? You cannot continue to rely on maybe your systems provider. You've got to look internally at your own business and your own operations around the cyber claims perspective. Just over the past 3 years, like I think I was saying this earlier, like it's at 4% right now, but over the past 3 years, the financial services industry has seen a 200% increase in cyber claims and targeted attacks at that industry. Types of claims. This is also important to know what, in the event of a cyber claim, what happens. And this is a continually evolving challenge from a claims perspective. So social engineering or fraudulent payment. Fraudulent payment, you get the fake email. We had one insured, didn't catch it, was working quick, got an email from what they thought was the CFO. Hey, you need to switch our payroll this week to go out here and not here. Before you know it, CFO made the switch, wasn't thinking. It was a fraudulent email. Therefore, a fraudulent payment went out, and they lost their payroll for those 2 weeks that they thought was going to go out on Friday. Social engineering is more of an attack that fools through impersonation. So whether it's baiting or phishing, from a social engineering perspective, you'll get the emails as well. Some cases we've seen instances, not specifically at our agency, but there's been instances where a cyber attack happens because they leave a thumb drive on purpose at a business, or they leave a thumb drive at a location where someone sees it, they plug it into their computer to see what's on it, and it has a virus on it, and it can go in, pull all the personal identifying information, send it before you know what happened. Ransomware as a service is an incredibly scary thing right now. Ransomware, I think we understand, right? There's complex cyber criminals that create ransomware that can go in and whether take out the machines in a manufacturer or manufacturing facility, or from a contractor perspective, attack their sensitive data. But now those sophisticated ransomware attacks, those individuals or black market people are actually selling their ransomware as a service to less sophisticated cyber attack individuals. So you can essentially buy ransomware as a service, implement it, and I'll tell you, a lot of the focus and a lot of the attacks over the past 2-3 years have been focused on small businesses. That's where we come in as an independent agent. We're able to partner with the small business, understand their needs, have multiple companies as well to be able to work with to make sure they have the right coverage program, to that it should something happen from a ransomware standpoint or fraudulent payment, that they have the right coverage in place. The third type of claim is the nation state attacks. If you just, after this, if you want additional reading material, just Google SolarWinds attack. You'll see that it is believed someone or some people, organization or group from Russia came in, attacked SolarWinds, which is a corporation that has, they provide system management, IT system management, and over 30,000 individuals, businesses were compromised through that attack. So, cyber insurance is complex. You'll see first party, third party, and cyber crime coverages as well, depending on your risk. And especially around social engineering, if you look at crime, You'll see social engineering and computer fraud transfer included in the crime portion of a cyber policy. That's where I start. I recommend all three, and then talk to the business around what are you seeing, what backups do you have in place, what does your plan look like, and kind of go from there as far as creating that customized cyber program for them. For you financial advisors, the SEC in 2022 released several new security regulations and reporting requirements. It was primarily tied to public companies and their board of directors, with some additional detail. Nothing has been implemented yet. Nothing has been finalized yet. But I think you can kind of see the way, the cyber attacks and cyber incidents are becoming so regular that the SEC is getting involved. You'll want to check your state too. There's about 4 or 5 states that have already adopted. I know California, Virginia, off the top of my head, have already adopted stricter rules and regulations around cybersecurity and preparedness. And then finally, for you as financial advisors, please make sure you have a plan. Please talk to your independent agent or your insurance agent around, what do I have? What do I need? Again, I go back to that multi-factor authentication. Yes, I get annoyed sometimes when I try and sign in to a website and then they have to send me a text to my phone or they have to send me a code to my email. But that is a way for them to protect their sensitive data. That is a way for you and I to protect our sensitive data. Do you have a cyber incident response plan? In the event of a hack, in the event that something happens, what is your response? What are you going to do? Social engineering, or that phishing check and balance. I know that, for our email, if it looks fishy, no pun intended, it'll get kind of banked, and then I'll get an email, hey, these are held up. Do these all look good? I can release them. I can delete them to help kind of that check and balance from an overall phishing or social engineering perspective. And then whether it's you or you're working with an outside vendor, what are your system updating procedures? Or is that monthly? Is that weekly? How often are you looking at that? How often does that occur? But please make sure you have a plan from that perspective. So Abby, with that, that's kind of all the information that I have to walk through. Do we have anyone out there? Any questions?
Yeah, I had a couple people tell me that they were trying to participate in the polls, but their phone service wasn't very good. So that's disappointing, but I do have.
Hey, we had a response to every poll, I think. So at least we had 1 or 2.
Okay, so someone's phone is
working. It was new technology. Trying it
out. Okay, let me start on these questions. Would I receive a discount for coverage lines if I added my business insurance to my home and auto policy, or do you suggest using separate agents?
So a couple of things there. Let me go to the end of that question. When it depends on the agency that you're using, I guess is what I would say. If your agency has an understanding of both personal, home and auto, and business insurance, you can use the same agent. But I would recommend, and most companies won't even allow you, but I would recommend you write a business insurance policy. So you look at your business and you write the property liability. There's a business owner's policy that combines both auto, workers' comp. You keep the business separate, and then you look at your home and auto umbrella as well.
Okay. This one says, correct me if I'm wrong, EPLI is a line item on my business insurance coverage. Please explain more about what that is and what it does for my business.
Sure. So EPLI stands for Employment Practices Liability Insurance. It can either be, you can either have it tied into like a business owner's policy where there would be what would be called a sublimit. Your general liability may be 1 million, 2 million, but your EPLI has a sublimit of 100,000. Depending on how many employees you have, depending on your location of employees, if your employees are remote, if your employees all work in the office, you can also get a standalone EPLI. What an EPLI is going to cover is lawsuits for wrongful termination or discrimination or harassment. So yes, I highly, highly recommend If you have more than one employee, if you have any employees outside of the owner, that you have an EPLI limit somewhere throughout your insurance program. Again, depending on your span of employees, working conditions, where they are, that would gauge whether you can get enough limits on your underlying policy or if you need your own standalone EPLI policy.
Okay. This one was about workers' comp. I think you just said that one question ago. It says, I believe each state requires workers' compensation coverage. Since I'm an owner of my business, can I exclude myself from workers' comp?
So each state will have its own set of requirements. For instance, in Iowa, if you're an LLC, the owner doesn't have to be covered. I would say check with your independent agent, or give me a call. We can walk through what the state regulations look like, the state guidelines look like. Typically, most owners exclude themselves. They're not going to sue their company in the event of an injury. And there's kind of the thought process of, well, I'm the owner. If I'm injured on the job site or if I'm injured at work, the company will pay for the medical expenses. But most times we do see the owner exclude, depending on, for the most part.
Interesting. I guess that would make sense. Okay, last question here. Says, I have a lease that says I'm required to have general liability and umbrella coverage. Shouldn't this be the responsibility of the landlord or the building owner? I'm told this is normal for leases to include, and I'm curious as to why.
Yeah, good question. So I'm going to assume this is in a business, a commercial line setting. So yes, the landlord will have coverage for the building itself, the property and liability. What that will not cover is the individual businesses that are renting or leasing within the building space itself. It doesn't cover for a possible accident or injury at the actual place of business, your actual place of business within the building itself. So that's why you do need additional liability coverage, even above and beyond, or in addition to what the building owner has.
Okay, good to know.
Yeah.
Let me check here and make sure I'm not missing anything, but I do think that's all of our questions, so we'll wrap it up there. Thank you so much for being here, to everybody who's attending, and thank you to Steve Snavely from MF&H next door, and brace yourselves for this storm that we're about to get.
Yep, drive safe if you're in the Midwest. Thanks, Abby, I appreciate it. Thanks, everyone.